Have you ever had something in your life that you just knew you needed to get done, but no matter how many times you saw it on the to-do list or knew that it needed to get taken care of, you just didn't get around to getting it taken care of? Well, for a lot of people, that's estate planning. It's one of those things we don't like talking about. I mean, gosh, we wouldn't need it if we didn't die, right? Who likes dying? So it tends to be one of the bottom tier things on our to-do list. But unfortunately, if you don't take care of it, what could end up happening is a nightmare for those people who you love most, that you get left behind after you no longer need those assets, those dollars that you're planning with. And in today's video, we're going to talk about one specific estate planning tool, or one specific element of that plan that could potentially not only save you or your heirs thousands, millions of dollars in taxes, but also make their life easier while you're still with us and in the hereafter for them who are left behind. Hi, I'm John Norberg, and welcome to the Financial Prof series. So in today's video, we're talking about trusts, right? So 5 major tips that we're going to go through today. And if you listen to tip number 5 towards the end, it's also going to have that tax planning aspect that I hinted at earlier. So it's not only an estate planning, but also a tax planning video today. So let's dive in, shall we? So tip number 1, this is why should we set up a trust in the first place, right? Well, one of the biggest reasons that people do so is for privacy. That is, they don't want their documents, their wishes, their final will being dragged through the public arena. So tip number 1, if you value privacy, if you don't want people digging into your affairs after you're dead, then a trust could be a really good vehicle for that. Reason being that wills are public documents. You know, there's a reason that we have a register of the wills in the first place. It's because that will must be registered, if you will, and then it becomes viewable by anyone who has or thinks they might even have any reason to have a claim on your estate. Your friends, your family, your enemies can all go see what is in that will, and guess what? If they don't like it, there's the possibility for lawsuits to rise out of that too. So reason number 1 is privacy and avoiding that public scrutiny, right? So trusts, unlike wills, are private. You don't get to know what's in them unless you're in the trust or you're affected by it, in which case, yeah, you're going to find out. Okay, so tip number 2, reason number 2 that people set up trusts and why you might want to consider one, is the ability to customize and really control what happens to your hard-earned money and assets after you pass. So an easy example of this is one that does come up occasionally in estate planning. It is the no asshole rule, as it's sometimes affectionately called. This is one of those provisions that you see from time to time in a trust where, you know, dad or mom worked really, really hard to earn all of this money, build this business, and, you know, build this empire. And then what happens is mom or dad passes away, and unfortunately, one of the kids, and of course this would never be your kids, but you've heard stories, is a complete spendthrift, a profligate, a prodigal son or daughter, right? And they would just take this money and run off to Vegas, spend it all on wine, women, and song, as the case may be. And the no asshole rule can set up provisions to try to help prevent that, right? Such as the beneficiary must at all times be gainfully employed, or the beneficiary must not, have any provable addiction to drugs. And you can put really anything that you want in it. Specificity is key, actually, to a lot of trusts, and so having the ability to say exactly how and who gets what in what way, and the disqualifying or qualifying factors, is one of the huge reasons why people set up that trust. So customizability, reason number 2. Okay, so reason number 3, addressing family dynamics. In other words, you know, you might have a divorce or 2 or 3 in your background, as the case may be, or you might be part of a blended family. These are oftentimes reasons that trusts come into play. Again, it kind of goes back to reason number 2. Reason number 3, it can very specifically dictate for cases like that who's going to be the trustee, who is going to get what, and who has the ability to dictate whether or not the terms of the trust are being met, and set all of that up, again, in a very specific manner before you pass, so that when you do, hopefully any internal fighting is minimized. So, again, reason number 3 is family dynamics, especially if you're in a blended family situation. Okay, reason number 4 is these can be, again, going back to reason 3, very helpful. Trusts can be very, very helpful, actually, when you're helping a relative or a family member, a parent perhaps, manage their financial affairs. So maybe it's becoming clear that although they're still cogent and with us and everything, their mind might not be quite what it used to be, and this is the time to help them, maybe through a series of family meetings with a good, qualified, competent estate planning attorney, to help them figure out, okay, what do we actually want to have happen? And making sure that those wishes are put down, again, in a very specific manner before it comes to a case of incapacity. You see, with a trust, unlike with a will, it can actually use the document of the trust, the provisions of the trust, while you, the owner of the trust, are still alive. So if a will only kicks in after you're dead, a living trust and or a revocable trust can still have effect while you're alive, hence the name living trust. So again, let's say you've got a family member who might have a lot of money and might need some help running that money. A trust can be a great vehicle to set up exactly what that could look like and give a person or persons trustee power to help make that happen, right? And then finally, number 5. So reason number 5 that people set up trusts: tax planning, especially when it comes to estate tax. So let's step back for a second here as we enter into reason number 5, because this is a big distinction I want to make. There are 2 main types of trusts. There's the revocable and the irrevocable trust. So with a revocable trust, it is exactly what it sounds like. You can revoke or change the rules which govern the trust while you're still alive, and anything that that trust says can really be amended by you, the owner or trustee, and that person then can, again, you in this case, decide that, I want to change all the beneficiaries. You can do that. Or maybe there's a new son having a baby boy or a baby girl that you want to add onto the trust. You can do that. Revocable trusts are exactly that kind of vehicle. And they still have all of those benefits that I listed out earlier. An irrevocable trust, on the other hand, is exactly what it sounds like. It is irrevocable. It cannot be changed except under very limited, very unique, and rare circumstances. There was a big story in the news recently about Rupert Murdoch, who owns Fox News, and how he was trying to change his irrevocable trust. And as of this filming, as far as I'm aware, despite multiple attempts to do so, going through some of the highest courts in the land, he has not been able to change it, because an irrevocable trust is meant to be exactly that, irrevocable. So if you are thinking about a trust from a tax benefit standpoint, the reason that irrevocable trusts can enter into the tax planning sphere is because they're really considered their own separate entity. Almost think about it like another person or organization, if you will, where if you put money into that kind of trust, it belongs to that trust, and it is well nigh impossible to get it back out again. So you want to make sure that whatever rules or provisions you put on that trust, you're comfortable with forever. And because Rupert Murdoch was not, and he wanted to change some things about what kids had what control over what, he wanted to go back and change that. And again, so far he hasn't been able to. So the benefit, however, of doing so is that it can have huge benefits when it comes to your taxable estate. Typically, irrevocable trusts are used to remove assets from an estate. So granted, this only comes into play if you are one of the fortunate individuals who has a taxable estate. For 2025 here, we're getting close to $30 million between married couples that you would have to have before you would be able to consider your estate taxable. Now, that is due to be cut in half at the end of this year, although we'll see there's a lot of talk around those provisions being extended from the Tax Cuts and Jobs Act. But if the current Tax Cuts and Jobs Act provisions are not extended, then that exception will be cut in half. So again, it would go down in that case to right around 15 million or a little less. I forget what the number is here in 2025. We'll put that in the show note descriptions though. However, the thing about the irrevocable trust is by removing those assets from your estate, now they're not going to have the estate tax applied to them as long as you do it in the right way. The other thing is, in addition to that initial funding amount, so that big lump sum that you would potentially put into that irrevocable trust at the beginning, you can continue to fund it according to the gift limit exemption, which here in 2025 is $19,000 per individual, or for a married couple, that's $38,000 per year. So in addition to the initial funding amount, you could also put that amount in every year afterwards without it being a taxable or gift taxable event. So, if any of these reasons appeal to you, or if you've been thinking, gosh, I got to do something about my trust. It's been 20 years since I set it up, and estate laws have admittedly changed in that time, then it's probably time you sat down with your professional team. And if it's been a while since you chatted with your financial advisor, or you're thinking this is the time to actually engage with one on this, we'd love to hear from you. Give us a call or drop us a line, and in the meantime, we hope to see you out there.